Having stood the test of a decade, the 369 mandala, rooted in an ancient Tibetan esoteric symbol, uses its layered geometry to pinpoint subtle shifts in market momentum. The interplay of its coded vibrations, derived mathematically from price and volume, reveals key resonance points. These resonance peaks are identified as high probability zones for anticipating imminent price reversals. By monitoring the dynamic interaction of these coded layers, traders aim to predict turning points in market trends with a system proven over time.
All right, friends, let's welcome you back again for level 0 success. This time we are going to use Mandala, as you heard. All right, so how do we use it? Pretty straightforward, nothing much to do. We just go to our 369 L0 success single bar Mandala, select the tool, and we're going to put it in a certain fashion. The only thing we have to worry about on way 59 is that we add some data to the right side, right here, few days ahead, because these lines are just plotted. We can control these plots. Our real reason is just to give you some space, and you can see things happening. This is happening from today. All right, and on the left side, we are going to use 30 minutes as we become decent traders, meeting our financial goals for the week. We are still at level 0. We want to still get to the point where we win 4 days out of 5, 18 days out of 22 trading days. And as long as we keep our cool and composure, we get to the statistics as we have over decades and decades. So what you should be doing is getting that level of stability first with let's say 10 tools, 8 to 10 tools we are going to release in level 0 at the introductory price, as we have been talking about. So we're gonna bring some things you can manage, something you can understand. You start shifting your own vibration to these things. That's the main thing. All right, because market is going to do what it is going to do. People make millions and some people lose lots of money. The only difference is your vibration syncing with the market vibration. And ES is a good starting point because it moves in a predictive fashion. It has very thick bid-ask spreads. At each layer you have hundreds of contracts, right? So it's not jumping too fast either. YM is also nice, but let's stick with ES at level 0 as you move forward. And we can trade wheat, we can trade any instrument because these tools are adapting to the market condition as fully automated. Just one click, you're set to go. Again, sticking with way 59 because we use a lot of Astro modules code base behind the scene. So we need to use that geometry and things like that, which is easy to do in this software. Also, we promised we'll give you some 2-3 code bases free, not what we are sharing in level 1, 2, and 3, but other ones, just to get you started with geometry and Astro modules on your own and start your business one day. So here we are. So now the question is, where do we place this tool? Well, this is a 30-minute chart, as you can see. So at level 0, at level 1, we teach you techniques, how to manage all this a little bit more deeply. But at level 0, you also have the oscillator, which is balance imbalance oscillator. Great start at level 0. On the left side, we have 30 minutes chart. On the right side, we have 5 minutes chart, and we have same oscillations on both sides. All right. 5 times 6 is 30, so this is a jump of 6. That's all there is. And 5 is number for United States of America, which is a Cancer country in itself. And right now Pluto is in Aquarius. We will discuss that. All right, so question is very simple. You pick the tool, you drop the tool. As the name suggests, you will be looking at a hotspot. This is called a hotspot. Just on the left side, you just there's some icon which is a finger and also a tow truck. When you activate that, you can activate, this is just obviously a mouse, right? You activate that finger or a tow truck, you get close to where you dropped it. You can see this is called a hotspot. You just drag it right where it belongs. Okay, so where do I do it? What do I do it? How do I do it? Well, this is where what you can do at level 0. Look at the oscillator. At this point, this was the big bar and oscillator was on the overbought level. This is a big bar mandala for the reason because it is single bar, and we're looking for a bar which is big enough visually, and also it is closing and making a strong move, right? So if you look at this close bar by bar, if we look at all excuse me, look at all these ones, right? All the closes and the lows of all these bars, you can see right here. This guy closed below it, isn't it? Since the open. All right, so right here. So this is what we call as initiative move bar, which has nullified all this with a strong strength, as big enough, and it is early part of the day. Trading is starting pretty soon, so this is half an hour, so we are going to use this as the filter. If I look at this guy, this is a very small bar. Remember, we want to use something big, initiative, impulsive looking bar, and this is the biggest bar so far in a downward move. This is the up moving bar, which we'll place on this one if you want to go and retrace it on the other side. So once you place this where it is placed right now, if you don't know where it is, just press shift key, it will take you there. All right, so this is why we placed it here. And then also what we can do is also, if you see here, we can retest and do some cross validation. What does that mean? It means if I have placed it here, you see that 2 yellow lines, 2 white lines. Inside this range, you have something called a square of a square of a square. They're like unfolding of 6 squares. So we have inside square and outside square. This is the hotspot. Why this bar is chosen and how do we know this is the right bar? Because the beginning of these lines are starting at this bar. So this is how we know we have placed it correctly on the bar. Once we do this, this structure is shown up here, and this is inside square. So what has happened? Market came inside this internal square to the tick. And look at this oscillator again, telling us to go short to the tick. And it goes. So this is how I see. Okay, look at this location, big bar, no. This big bar location, yes. So I could have done this, but this is not early, this is late night. So since the midnight hour, we track the bars. This one is not good, this one is great, we place it here. This one has been placed, is being retested now. We're going to trade, right? We can't keep moving. We want to trade it, right? That's what we do, early part. So between 3 to 6 or 7, if I see a bar big enough, I just place it, keep it here. I see the validation, I see the oscillation. We are done with the short. On the right side is a wave inside wave. This is a short, precision short, where two things have jammed on the top side. We are retesting inside Mandela. On the left side, we have the same thing. The oscillation we have seen before. This is a short. And there we go. So this is how you want to do this two chart analysis at level 0, and you make your cash flow. All right, so what's going on next? Now we see the square of this bar is unfolding in a bigger square, in a bigger square, in a bigger square. So this is reflection, see that on the top and the bottom. And then we see these yellow lines. We are now getting into outer boundaries of spherical. Think about a sphere, and inside a sphere you have a cube. We are reaching those outer boundaries of the square. So these are all calculations of spherical and numerical analysis. If you understand sphere and the volume of a sphere, and if you understand the cube and the dimensions of the cube, and how can you fit a cube inside a sphere, right? So we understand all those relationships, and this is where these numbers are coming from, driven by this single bar. And this is working, it works in any time frame because this is a market neutral, right? All right. So I think for level 0, this is good enough information to get you started. So market is going up. You're looking for a short. Can you do something in Mandela? Now this is what we can do on the right side with Mandela on a shorter time frame too. So let's apply and bring your Mandela. You're trying to put things together for you to trade directly from day one. Watching these videos over and over in one day, next day you start trading. In 1 week you are up 5 grand. You should be winning 18 days in 1 month. Do it for 2 or 3 months. Do it for 1 month. You're ready for level 1, which you will spend 3 months. Then you go to level 2, which you will spend 3 more months. And then you get into level 3, where you're going to be forecasting the future 100 years in advance. Single bar Mandela. And this price means nothing, not at this stage. So what are we doing here? First of all, we see on a 5-minute chart, if you place it here, this is a fractal. Now you watch this, okay? At this level, I am thinking market is going to go short. I see this revelation of this bar, as they say, which we see this. Okay, what I'm expecting, market is going to go in the shorter time frame, we go to these edges. We got a reaction, retested the square on the other side. This is how good this is. All right, but we are using this for something else, going on the other side. All right, now this is 30-point move, 20 point, 30 point. You will get all the vibrations. You got to, it'll take time, as I said. All right, so what are we doing here? Think about it, right? Think logically. What are we doing? I'm trying to justify taking a shot here, which is here. So what am I expecting? Think logically. These are my circle and square, cube, you can call it. And think about a bouncing ball. It is just bouncing between the edges, confined in a sphere and sphere inside a, bouncing in a sphere, but there's one more thing inside the sphere, which is a cube. All right, so this is the dimensions. If you can look up the mathematics, you can program this on your own as well. All right, so that's all I can share. Okay, because these things have some value. So okay, so now I have given you some rules, right? How to qualify the bar at level 0. People who have gone through level 1, level 2, or in level 3 for last few months, they have gone to 2 years journey, 1 year journey, right? So they are ahead of you. So they can just see it, and they can just, you'll see they'll mark the levels and say they will go along here. They have gained that level of maturity in the vibrations. All right. It's evolution. So okay, so rule were, look at this, look at, if you're trying to go long, look at the location of the bars. If there are 2 bars, which one? Shall I put it here? Shall I put it here? Right? Look at the oscillation. It will tell you what to do, which bar to use, right? Help you out. All right. But we are looking for initiative bars. This could have been initiative bar. Why not here? Remember, we can't keep moving, right? We want to trade. If I put it here, it's giving us a different vibration. It is still getting to, now these are the zones, right? The green zones, yellow zones. This is the extreme zone. There's nothing beyond this. If you put on an extraordinary bar and keep moving, so this zones will keep moving too. If you wanted to do this one, then you have to look at trading at this green. It may or may not reach here. Do you understand? All right, so this is all the differences. This is green, we are inside the green, and top of the yellow. This is giving us the area of reversal. It is not telling you pinpointed thing. All right. So what are you going to do? Once we have the location and the bias, we're going to take the trade in the direction using the right chart. So here, do you think this is the right placement? Now what is happening here? Market stopped here. Because of this first bar, because of this bar, first red bar stopped here. Just like it is stopping here, it's a fractal. All right, what next? I'm gonna go other way around. Why? What am I trying to do by doing this? I'm trying to justify something in this example, taking a shot, because the location is staged by the oscillator. So I'm looking at a fractal inside a fractal because I'm trading and triggering things on the right side, right? Not on the left side. You could, if you know how to do hedged trading, where we have pairs trading of multiple contracts, YMES. Sometimes we do other kind of complex contracts. The reason, not to put a stop loss. You're not at that stage. If you are a new trader, you'll get confused and lose and be scared. All right, so I know market is retracing. And I know if it goes to this levels, I'm gonna take long. I know that. So this is where it is staged. But now, instead of waiting for taking long, at noon time, afternoon session, it is retracing earlier. And now market is about to open. Market opens here. They're giving us the impression they want to take the market long. But what is happening on 30-minute chart, it is telling us very clearly this is potential short coming. Looking at this area, right here, look at the oscillator. These two areas, two of them are jamming upstairs, which means overbought, as you know. Now Mandela has given us a structure. So these are the levels I will be going. But now this oscillation is of interest because it is saying, hey, this might hold. So if I put these two together, see on the right here, internal square of this Mandela on 30-minute chart is being retested. Here it is external square of a fractal of 5 minutes to 60 6 times, right? 5 to 6. So 5 times 6 is 30, sorry. So 6 jumps up. We always do 3, 6, 9. So here it is. So this is telling us, and Mandela is telling us, this is a good place to short. This on the left side is on a higher time frame doing the same thing. Now we're not looking inside the bar, we're using order flow trading. We're looking at the structural trading. If you're trading heavy lots, you have to look inside the bar. We call it T bars, inverted tree bars. There's so much software there. We can put some more videos on those again. We call it T inversion bars. That's all you do. And the value is jammed on one side and you're trapped and you go on the other side, right? Again, this is all natural phenomena in professional trading. If you're a brand new trader, start with structural trading and the oscillation. So we have a good shot. All right. So this is your trading system 2. If you prefer, it doesn't hurt you to know these levels. You can just put it on. You have, now you're qualifying this, and now you have a frequency from the trading system 1. You just need 2 screens. You need 3 screens. You got your systems. Ultimately, all this is dealing with the structural areas of the market. All right, so now we are reaching in this area. Now you have to ask the question. Will I go along here? Will I go along here, right? So let's ask the question. This is what we'll be dealing with every day. Shall I go along here? Shall I go along here? What's the answer? Look at the location of the oscillator. Both are saying yes, you can go along here and here. But if you just want to look at in general sense, this is a long area, right? Market just still wanted to go here before it bounced. Okay, so we know this is a possibility that it could go from here, or it is possibility this is a range, right? This is why we have this range. This is the initial range and this is extreme range and this is it. If you start seeing this every day for years and years, 10 years, you will see this and you will get some maturity. Now first time is going to be a challenge. That's why you need to practice at level 0. You should win. In level 3, you should have no, we are talking about 0 losing trading days, right? All right, so now let's delete all this. You have to make a decision. You got to trade. What next? Now I am going to qualify the bottom. So what is the rule? Rule is not going to change. Rules don't change. Keep it simple. The structures will show up. Market is going down, holding sideways, initiative move. Is this a good bar? Look at this big bar. They're all same big size bars. It went sideways. It's gonna gone. It have gone up, gone down, right? If it's going up, now we're looking at going down. So I'm gonna look for going down. So is there a bar at this right side overbought oscillation? Yes, there is. This is the red one. Going down is the red one. And on the shorter time frame, I'm looking more into this yellow zones. Okay, that's all there is. Okay. So here, the question is asked here, go long in this area. Look at the oscillations. We said, yes, you can go long. Both are saying you're long. When it comes down, a little bit down, two of them, close to blue, if you are desperate to trade, you got 20 points here. No worries. Came down. Now, look at this VIX. All right. What is happening now? This is a zone. We bounced from the zone. We went back to this, reacted from this Mandela level. Look at this on the top. Oversold or overbought. This is overbought at the level. Not touching this over and over, right? We just don't touch. We let it see. Okay, cool. So once we have this push, like sideways push up, we find a new Mandela. Sideways up, push, find new Mandela. So this Mandela has reacted itself. So that means the structure is okay. We can still react it from here. It is bouncing from these levels. Okay, so now is the question, which I think we already addressed it in the first trading system, that this is, two of them are below this level, right? Close to blue. This is okay. We did not do anything. This was a loss. What next? If it didn't take off from here, took a loss. What next? You have this level and this level. So I'm looking at this. If this cracks, I'm going to be trading here for sure. I'm still on the left side. Now on the left side, I have this, again, two yellows are converging. This is the midpoint of convergence. This is the top of convergence, right? So yeah, at this structural area, as expressed by the bar, bars are telling me where things are, right? We are anticipating up front that buyers or sellers will show up here at these lines. So we know this hours in advance. If you have sophisticated softwares and bots, I should be activating longs here. The bot is smart enough, it will not take long. You should see a buyers coming in. If you take a loss, no worries, do it again. All right, so unless you understand and trust these structures, it'll be difficult. We have predicted major highs and lows using this one single tool. It is easy. It's done correctly. It's programmed correctly, and it has right mathematical structures. Another thing you can also look at is when you put a structure somewhere. Remember, there are two sides of. Now think about this as a circle or a sphere. You see this top was held by this. So this is telling us that market is going in a, if it rotates on the other side, it's coming here. So this is also, you can do what we call as cross validation by putting the structure and saying it reacted at this level, it reacted here, right? All these levels are being reacted. See this one and this one. So I am confirming my thesis of my placement at level 0. All right. So here they are compressed, all three at the same time, moved not like zigzag, moved very fast into one location. Better trade. It's holding, the wicks are here, it's holding to the tick, but you're gonna be trading here, right? So this is it. So what we have done, You qualified the trade spots very effectively with this approach. So I hope this works out nicely as a level 0 trader. If you want to get into this sophisticated approach to trading, just to show you some example very quickly how powerful these things are, and the power will be yours. So there are so many things you can do with this. Now this is placed here. Market is vibrating at this levels, goes to the tick here, comes down, right? So there, you will learn that through once you acquire these tools and you are using them. So if same thing, if I do it here, this is my initiative bar. Is this a good bar? Look at the oscillator on the top. We have a red bar right here, going down, red bar, same patterns right here, same patterns show up over and over. Now we have to go back to the right side, sorry, left, yes, right side, and we qualify this, right? Methodology has a structure, repeatable, easy, and you know what's going on. All right, so we are here, market. So what are the rules? Well, if you are, let's delete this. You can always delete it, and it's a good practice to see how it is done for level 0 traders. Let's go to this 369. There are a bunch of oscillators here too, but we have built everything. All this library, 0, 1, 2, 3, 4, huge library, done beyond belief. And then there are other things we teach and we discuss. Unless your job is to flip your mind on the other side of becoming a professional once and for all. It takes 90 days to 6 months. There's no easy shortcut. It's a lot of work for all parties involved, but with the right tools, the right structure, right positive first step. All right, so where do I place it? We already discussed it. This is the big bar on the top. Initiative, it has broken all these levels. Perfect. What are we expecting? Green zones, yellow zones. Okay, then you might think, hold on a second, let's mark it. All right, that's what we do. We do it in multi-time frame. I'm not even getting this 1 hour, 15 minutes, 4 hours Mandelas. I'm just doing it to 5 and 30 to make you win 18 days out of 22. That's the purpose. Now you just said, it comes to your mind, right? You just said, hold on a second, it comes here and goes sideways, goes up, maybe you should find a new one. Is there anything wrong with that approach? Not really. But do we have any oscillations? It has to be above the red. So if you're forced or tempted, excuse me, this oscillator is on the top side. So I'm looking for a big bar here. This guy, okay, if you push it, no worries. So which bar are you going to use? Somewhere here. This top two are very small, so that won't work. We need something, initiative, which breaks the structure. So maybe when you're starting off, you'll be doing like this, which is okay, nothing wrong with that. Right, this is in this initiative move, this is the only big bar you got, same thing. So what's going on here? This is working. Now remember, oscillations are oscillations for level 0. All right, apologize. Okay, so then market goes up to the inside square, retest. This is one inside square. This is second inside square, goes to retest it. On 17th. And then you can use it as a reflection as well, as I said. So what does that mean? So I hope this helps you to know things hours and hours in advance. What you're gonna do, where the edges are for the day, right? In the next video, we're gonna show you something else. This is part of level 0. We're giving you some tools from all different sections, right? So next one will tell us potentially days, highs and lows using a structure of replicated 45 degrees, which I will show you in the next video. So okay, this is what I was looking for. Let me explain this and then we can wrap it up. So what's happening here is, what we are saying is we are going to look for a bar right here. Now we're looking at a structure where we have bounced from at this point, right? So if I'm seeing this structure has held, this structure, as I said before, also has held, and this is going down at this level and bouncing, we know in advance, or here, or bouncing in advance. We have 3 probabilities, bouncing from it here. That's all there is. If you wait, then what has happened by putting and finding, by moving this tool across each and every bar, we see we have found a structure which is working. We have done the validations right here, right? It held and found a center point. Now we are saying, okay, it also found this reaction here, reaction there, reaction there. We have found the right structure, which means it's going to go and retest it again on the other side, on a shorter time frame, right here. And this is one another things which you will learn. You will see the laws of reflection, all right? But until that time, as you are starting with level 0, you're focusing on see if you can trade or not. We are taking a different approach for level 0. Can you trade? All right, on 17th at early morning, right here, on this big structure, we are retesting this area, saying go short. Short area is there. Where is that? It's right here. So if you don't want to use that bonus information, let's get back to business. So where is my business? Where is my business here? Market is rotating. Its initiative biggest bar is right here. Market is biggest bar is right here. All algos just rotating the market, drifting up. Risk-free rate right here is the zone. You're expecting the market goes to the green zones, we'll trade green and yellows, right? Internally, internals are there to validate and also get on the trend. My initiative bar, pull back to the square, pull back to the square, internal square. Entry right here, long. But we are also looking for this structure. Now, once we have this internal structure validated, we get more confident that, hey, we have found the right bar and the right structure. Market is following this structure. We have this green on the top, green at the bottom. This is a range, right? We are going after the range. When it gets there, look at the oscillation inside the range. There's a shot. Boom. You should win. 18 days out of 22 trading days. You should win 4 days out of 5 every week. You trade. If you are losing 50, winning 50, you have problem with money management. Once you cross the ocean of level 1 and level 2, you should be losing never. You should be at the Goldman Sachs level. They lose 1 trade a quarter, 1 day, losing day per quarter, right? You can be at that stage. We are saying you're going to be losing. You should have a 0 losing days once you become a mature trader. Market goes back to the same structure. Long here. This is the buyer, biggest buying bar was right here. It's being held, retested. And we have this Mandela telling us. So with some practice, making trades and using, I would say, Apex trading is very popular. Seem like there are the 3 or 4 companies like these. So what is happening here? Your cost of doing business has gone down so low, so low. Start a company. Once you can start trading, get 20 accounts. After level 1 and 2 in 6 months, you are looking at $20,000 a day, $19,000 a day across 20 accounts, $1,000 a day. So that requires absolute understanding of the market, and I think this helps. I hope this helped you to understand things a little bit more effectively. Things are so automated, nothing much to say besides making you believe on this structure. So what happened on this structure? The market is going up. This is the biggest bullish bar. So assuming that the bullish sentiment is going to hold, how do we trade this, right? Market is going. This is the first trade. Now this is a 30-minute chart. Same thing is showing up here in this fractal, right here. Same thing is showing up here. So that's the fractal nature of this structure. This works on higher time frame, like daily. We predict things years in advance using this simple tool. That once you master all this, you start seeing this, you know the levels you'll be trading here, start marking your zones. This is my buy zone, sell zone. Real buy zone, sell zones. I'll buy here. Now you can see how it is holding. Now things are going in a different direction, which is going down, but you see this guy is the initiator of this move. And his job is to defend the market as we enter into his area. This is the defense. This is the defense. If they stop, if they go down here, close here, it's stop loss. So if you're doing a swing trading, you can do this too. So we have to be at the structure. You have to be at two of these compressing together. This is two compressing together on the top. This is two compressing together in the bottom. Which we, from here we took it, and by using this oscillation highs and lows, we can pick which is a good bar by qualifying the bar. So the question of where to place is answered by the oscillator, and when to trade using the structure is answered by the oscillator. So there's a yin-yang relationship between these two. I hope this helps. Thank you so much.